Welcome. This is a free info session slash webinar around the idea of how you can help VA eligible clients, and maybe you yourself are VA eligible, create an investment portfolio, a real estate investment portfolio using VA loans. And when I say info session, I mean it just that. There's no sales pitch here. There's literally nothing for sale. And all we're going to do is have a conversation and address maybe some myths and misconceptions about VA loans and give you some strategies, tactics, and conversation points to help you when get more of these opportunities coming your way. And then what we're going to do, number one, we are recording this and we'll get the recording out to everyone who is interested. And number two, we will be building out marketing collateral that you can then use to create conversation opportunities, whether it's generating new leads or generating opportunities or conversations from your existing database. So if you want to build a pipeline of potential VA clients that you can help and serve, right? Help and serve those that have helped and served our country or are currently helping and serving our country, or you just want to use it for email, email content for emails or text or whatever. We're gonna have a whole bunch of things that you can then utilize around this concept. So we've got Jordan, we've got Ryan. Jordan is, if you don't know, Jordan Sires is, I don't know what his official title is on our virtual mortgage partners team, but he is a guideline ninja or a Jedi, let's say. And what I mean by that is his knowledge of guidelines, for example, today here, the VA loan programs, his knowledge of guidelines allows him to navigate and facilitate helping more people because
and more transactions for realtors, right?
Exactly, right? So one of our specialties at the virtual mortgage partners, one of our team specialties is helping clients that have been turned down by other lenders. In some cases, multiple lenders. In one recent case, 6 other lenders turned down. And that all comes from 2 things, primarily. The number of lenders and programs and products that we have access to, and then Jordan and our team's knowledge base for how we can maneuver whatever we need to. And it may be, helping folks improve their credit. It may be, how can we move around finances to better optimize DTI, whatever it is. That's kind of our specialty. Sure, we'd love the easy ones as well, the easy mortgage or loan opportunities, but our bread and butter is helping and facilitating the tricky, challenging, difficult transactions.
Yeah, and it's not just that. It's having a good base of knowledge. Is most banks have overlays. Like we spoke about this morning in your huddle of banks having overlays, but that's a lot of the reasons why they're turned down. It's not necessarily that loan program doesn't work for them. There's many times where I'll close an FHA loan that was turned down by 3 or 4 other banks because they're going to a bank and not a broker. And it's because they had a credit score minimum of 620 and they dropped to a 619. I've closed loans like that, and it's really, it's not as guru based as more of just that we have the ability, so
I want to use that as a jumping off point here. So I sent an email to my personal local consumer database around noon, pretty much asking, are you still thinking about buying a home, or have you put that on hold? And one of the replies I got, and I'm going to try and find this here so I can share it verbatim, and I think this might be a good place for us to start the conversation. Let me see here. One of the replies, Heather said, some credit issues needed to be fixed before we qualify for a VA loan. Why don't we use that as a starting point?
VA loans do not require a credit score.
So if you're taking notes at home, and you should be, that would be the first thing to make note of. And we're
It's
going
saying
to
that Crystal is saying the chat's disabled for whatever reason.
What the heck? I don't know.
I'm seeing her question.
Yeah. So use the Q&A box. I don't know why the chat. I'm going to have to get with our Zoom rep. I don't know why that is the problem. Well, that is a problem. I apologize. And also, we want this to be interactive. It's an info session. So if you have questions, you can pop in the Q&A box, or if you raise your hand, we can unmute.
We'll read them out loud anyway.
Yeah, we'll read them out loud. And if you raise your hand, we can even unmute your line and talk about that. So let's
let me clarify on that though a little bit. Okay,
that's what I was going to do.
So yes, there isn't a credit score requirement at all. So a lot of banks are going to be at about a 600 to 620 is normal range of credit score. There is we can go to manual underwrites. I've closed many VA home loans on manual underwrites in the 500 range. So you got 2 points there out. No money, right? We don't need, and we don't really need credit either. They need assets sometimes, and in the terms of reserves. That's the big kicker on those. Now, what you want to see, is typically a 600 to 620 for automated underwriting, which is like a system we run to know for sure they qualify. Basically, if you get that, no matter what, the loan will close as long as you keep that automated underwriting. That one is ideally for your agents. We want to run that every time because we never want to give you out a bad pre-approval. But in certain circumstances, we do manuals, and we'll do them ahead of time and get them all the way through the process and do a full approval, not a pre-approval, and that way. Greg says, don't lenders have their own credit score minimums regardless of VA? Yes, that is an overlay. I would say 99% of them do, but as we have 220 lenders, and we have at least 5 that don't for us specifically. So the whole concept of our team and our and VA guy, just in general, is how many more products can we have? The more products we have, and the more flexibility you have, the higher percentage of pre-approvals. More pre-approvals equals more closings typically. So
this isn't for this week per se. In fact, next week's info session is going to be around FHA. For example, FHA, you can, lots of lenders have overlays with FHA, but we have 6 lenders that will do 500 plus, as long as they have a 500 credit score. Now there are other qualifications there, but from a credit score requirement, we have 6 lenders that will do FHA down to a 500 credit score, right? So it's a matter of finding the right, having the right connections, finding the right lender or program. If you have someone who is motivated and ready, willing, and able to buy a home, we will help them. And the help may be a plan to get them to where they need to be, or it may be, we can navigate and figure it out in the short term. All of that. Back to VA. So we have technically speaking, no credit score requirement and 0 down requirement as well. Just from a guideline or a specifications perspective, what else should folks need to know about just the VA loan program in general? And then we can dive into how to use that to build a real estate portfolio.
There are no debt to income ratio requirements either for VA. So there's a misconception that you need a certain, again, it falls into the bucket of, can you get an automated underwriting approval, and then can you do a manual underwrite? But typically for VA clients, you don't have a debt to ratio issue. So for example, I'll give you an example here. I had a client, 780 credit score. We don't have a credit score issue, but we have 80% DTI. Can we do that loan? Possibly. Yeah, most likely, probably, right? We could run that, and as long as the system takes it, we could do that loan. The highest I've ever probably done it at is probably 73%. Now you still have to think about your client in these situations and say, okay, you know, maybe they have a fiance that they're not married, so they can't be on the loan. If they're not married, they can't be on the loan. Maybe they have a fiance that can't be on the loan and that there's another job there, right? We want to make sure we're not putting our clients in a bad situation. But at the same time, you know, maybe the wedding is 9 months out and they found their house today. A lot of banks will have overlays where that max is usually 50 to 55%. But that is not the case with VA. There are no debt to income ratio requirements. The second thing is that you can have multiple VA home loans. A lot of people think that you can't own more than one at one time. Now, it is true that you can't have more than one. You can't buy one as a secondary home or an investment property. You can buy like as a true investment property where you're not going to live in it, right? We're going to talk about that in a minute, but where you can do it. But at the end of the day, you can't have more than one VA home loan. There just needs to be a reason why, right? I'm moving, I'm getting restationed, right? That's a reason. You can keep that VA home loan as long as you have your eligibility. You can actually exceed your eligibility as well. A lot of people think you need to pay them back. Nope. There's just a down payment percentage after you exceed. And it's the difference between the down payment percentage of you exceeding and what your eligibility is. So if you go over by $20,000, your down payment's off $20,000, not the full house, right? So there's a lot of misconceptions there. I have banks where I have actually argued VA guidelines with, and that called the VA specifically and got it in writing and said, hey, this is actually the guideline, and we've gotten those through. So knowing those two things, you know, that is really important, as you can have more than one, and there are no debt to income.
So I pulled up, this got me thinking, I pulled up we get emailed by lenders,
Yeah.
right? They want us to send them our
Their
business.
VA, yeah.
Yeah. And so we got one recently, and I'll point out some of the highlights. Loan amounts as high as 5 million. Cash out transaction maximum of 100%, including financed funding fee. Why is that important? Well, let's say they want to build an investment portfolio, and they don't want to do it with multiple VA loans, but they have a property, you know, the property they're in has a bunch of equity. They could cash out refi and take that equity and use other, you know, a DSCR program or some other mortgage instrument to grow a portfolio as well. And then at some point we should probably get into, just so folks on here understand this, and I don't understand it real well, but the VA IRRL and what that is for existing VA loans.
An IRRL.
Yeah.
IRRL.
Yeah.
It's just it's basically, you don't go through the full mortgage process when you're refinancing, right? So it's a streamlined refinance. So if we have it's essentially allows veterans, and but by the way, I know we are talking about FHA. FHA has a streamlined finance as well. The FHA actually has one also, but the IRRL is basically a way for clients to drop down their interest rate without going through the whole process, right? They're able to quickly refinance. That doesn't necessarily include cash outs, but it is for rate and term refi. So if you have you're talking to a VA client, maybe you sold a previous home to, and their interest rates are in 7s, and let's say 2 years from now they drop into the 4s, they don't have to jump through all the hoops to get that done.
Yep. All right. So, and I'm replying to Crystal had asked, I just wanted to know who or where to send a client for pre-approval with you guys. Well, thank you, Crystal, for that. I am typing the response there. I will put, I don't know if you guys can see the chat or just can't use the chat. I'll put it as many places as possible, and we'll let everybody know where we can do that. That wasn't necessarily the purpose of this, but we appreciate you bringing that up for us. So it's not us bringing it up, Crystal. So I'll pop that in there. Now that have we covered most of the big rocks or the basics when it comes to guidelines, specs, et cetera. And does it make sense to kind of pivot now to talk about more strategically building investment portfolio?
Can we drill in on eligibility? Because I'm confused on that. You mentioned, like I thought that it had to be paid off. You're talking about multiple loans that you had to either refinance out of the current VA loan or you had to sell the property. Because
no, there's a caveat. There's a caveat. That caveat's $144,000. That next property has to be more than $144,000, and then you dip into bonus entitlement. So you have your normal entitlement, which is like $36,000. Okay,
what's that mean? I'm
entitlement.
I'm helping everybody watching.
Yeah.
You're talking Jordan mortgage stuff, and I don't even know what you're talking
about.
So
entitlement is basically what the VA is going to guarantee 25% of that mortgage, right? It's entitlement. So if you think about it, $36,000 isn't a lot of entitlement, right? If you're buying a house, if they're guaranteeing 25% of it. Anything over 144,000, they dip into bonus entitlement. Okay. And that bonus entitlement, I mean, we've done all the way up to $800,000 worth of loans. But that's that bonus entitlement. So the caveat is it's got to be more than 144 grand. It can't be, you can't go buy a house for 100 grand, basically.
Okay. So it needs to be 104. The entitlement is the amount that the borrower is allowed to borrow?
No, the entitlement is what is guaranteed from the VA. If you foreclose, that the VA will pay that bank 25%. So if you think about what FHA, VA, USDA, what they do and what the purpose of the programs, they're just mortgage insurance backed programs.
Right.
Just like if you don't put 20% down on conventional, if your VA is guaranteeing that bank 25%, bank is they always win, no matter what. I know no matter way you slice it, they could sell that house for 20% less than what they had it for, and they'll win still. They made their money off the origination, and they made their money off the interest. But at the end of the day, that's all that it's doing. It's the entitlement is what's guaranteeing that insurance payout for a foreclosure.
So what you're saying is that if you can get creative around the entitlements, then those rules don't apply around selling.
And the only rule that is $144,000. That's all. That's the only rule. So it's not complicated at all. People overcomplicate it when they want to buy a second home, but they just need a reason why. I've had people move a street over, literally a street over, and keep their house on VA and buy another VA home loan. That second one was $144,000. His wife was pregnant. They needed another bedroom.
I need a bigger house.
I need a bigger house.
So
my mom's sick. She needs to move in with us.
Yeah, perfect. Because Rose asked, can you purchase an investment property in the same state as your primary? Now, again, you're not purchasing the investment, right, Jordan?
You're purchasing a new primary.
Yes, and you have a reason why you're going to retain that existing, or you're a reason why you need the new one, and you're not forced to refi out of the VA if you want to keep the other one or sell the other one, as long as you can justify why you're buying the new one.
Correct.
Is that
fair?
Okay.
Yep. So a lot of times when I have a VA client, we're doing a loan right now for Paul Egley on this, by the way, that we qualified someone because they didn't quite qualify in their area to purchase a house on their own. Okay. So what we did was we bought a quadplex. We offset their payment. They're essentially not going to make a monthly payment for a veteran.
Yep.
But we're buying a quadplex. They live in one side. Okay. Live on one side. Their payment's completely negated. DTI, it doesn't really matter. Their credit score doesn't really matter, at that point. Right. They're essentially going to be having cash flow on this property and living in one side. A good reason is, hey, I want to have a single family home. There's your next one. That's an acceptable reason. I don't want a quadplex, I don't want to live in quadplex anymore. Buy a 3-bedroom quadplex, buy a 4-bedroom, duplex if you wanted to. Move into that one and say, whatever that reason is, I don't ever recommend people lie or anything like that. But there's ways you can set yourself up to where if you have family living with you, something like that. My entire family needs to move in. We need an extra bedroom.
So let's say you buy a 4-unit. You buy a 4-unit.
Mm-hmm.
And your unit has 1 or 2 bedrooms.
Yeah.
Okay? I'm just playing this out, right?
Yeah.
Your unit has 1 or 2 bedrooms. You live there for 1 or 2 years, and you use the reason that I need more bedrooms. Now you buy a duplex that has 3
I would
bedrooms.
recommend living there for at least 1 year too.
Okay.
It's like, yeah, it's a lot of mortgage rules, especially. I know we get into FHA next week, but if you look across the board, they want you living there for 1 year to double the loans on. But
Okay.
yeah, if you're getting restationed, different story, right? Completely acceptable reason. I have to move states. What do I do?
Yeah.
But yes, continue.
So you start with a 4 unit or 3 unit, whatever, and you got a 1 or 2 bedroom unit that you're staying in. A year or 2 or 3 pass. You say, listen, I need more bedrooms. Now I buy a duplex that has 2, each unit has 3 bedrooms or 4 bedrooms, right? A year or 2 passes and you say, well, you know what? I'm sick of having my neighbors just, sharing a wall with me. I want a single family house. Boom. Now I've got 7 doors, of which I'm living in 1. And the first 2 theoretically could be paying for
all. It would pay for all of it, is
Right.
what is most likely is what would happen.
Yeah.
Yeah, theoretically. By the 3rd one, you're going to run out of entitlement usually.
Yeah.
Usually you'll run out of entitlement by the 3rd one. Depends on your area, because a lot of times there's higher priced areas, stuff like that, that you can do. And quadplexes and duplexes cost more money. That's the other thing you have to consider. So by that 3rd one, a lot of times they want to go conventional. They've made money. Like they're not, and you got them into investing. It's not that you've shown them a better way, right? And if anybody has known a retired officer and how much money they make in retirement on top of the job they work after when they're 40, is a lot. I have one client, his name is Joseph Anaya. He's a retired officer. Well, not officer. I think he was the highest enlisted he could be. Retired and enlisted, worked a job. He's on his 9th property after I showed him that he moved into a duplex, was his first one. Then he bought a single family house. And that got his feet wet. That's that you just get their feet wet a little bit. And then all of a sudden they're talking to you about other products and other things. And you can do it on your first couple.
Right.
But eventually you run out of entitlement.
But the way you can free up the entitlement is the 4
Set
unit
penalty.
now has a bunch of equity. You
can
refi
refinance
that into a conventional, and let's say you don't even want cash out. You're just doing a rate and term refi, conventional, or even a non-QM or a DSCR. Now you free back up the entitlement. You retain the asset, you retain the cash flow, and then you can continue on. Or you could even cash out refi that, depending on the position, and use that to buy another investment property or asset of some kind, etc. It's a matter of just understanding this, and knowing enough about some of the things that Jordan is talking about to have these conversations. And the simple fact that you're having these conversations demonstrates to the general public, let's say, if you're when I say having these conversations, but if you're putting out this content, or if you're having a one-to-one conversation, the simple fact that you know some of this stuff demonstrates more value, because they likely have not heard this before. For example, I'm going to go back to where I used the jumping off point. This Heather, I asked, would you be open to having a quick chat with one of our VA loan specialists? And she said, we already have someone we're working with. Thanks, though. And my reply will be, yeah, that's awesome. I totally get that. The reason why I asked is because you mentioned credit, and there is no minimum credit for VA. So I'm going to try and demonstrate, hey, we, and maybe they have a great relationship, or maybe there's another reason why they're working on the credit, right? But the point is, by having this knowledge base and understanding some of these things, if you're the one dispelling myths or misconceptions, you're naturally demonstrating that you are a person of expertise and value beyond just the other, door opener agents in your market. Okay, so let me see here. We got
Leon Harper. Entitlement does come across confusing because it's not an easy math equation. Yeah. But yeah, it's funny the way they have the rules.
And Leon is a veteran. So Leon, thank you for your service. He was, and I think Leon might have been on late. Jordan had talked about at the beginning, higher DTI is
Allowed.
Yep. And I think Jordan mentioned the highest one that you ever did was 73.
Yeah.
It's got to be a reason, right? And you want to make sure that you still want to make sure that
I'm not going to get too deep into it though. There is no DTI requirement, but what it is there's a residual requirement and there's a calculation. So if you look up how to calculate residual income for VA clients on the household, they take utilities, you take square footage into account, you take a bunch of things into account. That's something we as lenders have to do on every VA home loan, no matter what. Typically you're still okay, even at the higher ratios. So
Leon says, I have a VA client with 24 properties. Now, that doesn't mean that all 24 properties have a VA loan on them, right? But that it's using the VA loan program as a starting point to build a portfolio. And then, by being patient and putting time on their side, your side, you can help them play Monopoly, essentially, trade up and add assets. Some great questions here, and we might loop Ryan back in as well. What can we do to advertise this to military personnel? Facebook ads, Google ads. So we'll talk. We'll brainstorm a little bit here. But Robert, I mentioned on the very beginning, and I don't think you were here for that, which is totally fine. We are going to put together marketing collateral and easily things that you can easily swipe and deploy if this is a niche or audience that you want to help and serve and build a pipeline around.
Part of the reason we're doing this is so that you and I can learn a little more from Jordan, and we'll probably turn this into a shorter video and a landing page, that you guys can share and ties back to you.
Exactly.
Yeah, I was wondering.
Well, this is one of the niches that we often have folks asking about, that because they want to help and serve those that help and serve us, maybe because they are veterans themselves, or they, that there's some affinity there, which I think we all have affinity to that, right? I mean, our freedom, are
absolutely
tied to that in some form or fashion. But like Greg Unthank has asked recently, and we've had others asking recently about that. And Ryan, sorry, I think you were going to say something.
I was just wondering if you could talk more about somebody who has an existing VA mortgage. What if they wanted to cash out, refi that mortgage with like another VA loan?
Well, you pay it off. You just pay it off. You're replacing it either way.
Yeah,
right. So
then you could take the cash from that and go into a non-VA loan, like a DSCR or something. So
Josh mentioned that at some point, but yeah, the DSCRs are pulling money out, cashing out up to 100% on their current VA home loans. I'm going to tell you the downside to that though. It's only whatever house they're living in, right? So if they have multiple VA home loans and properties, they can't refinance those properties and pull those equities out. What you can do though is do home, equity lines of credit, stuff like that. Keep the VA home loan on there, pull money out, or like Josh was saying, refinance it all together and continue to move. So if you want to be a person, if the veteran is used to moving around the country a lot, which they usually are, and they're not necessarily stuck to a school and they're really good. I mean, they can keep going until their entitlement runs out. So usually the rule of thumb is at minimum for most government and conventional properties is 8 loans. From there, you are a business, and you are going straight DSCR, non-QM.
I am just realizing now that several of you had raised your hand, and I allowed you the opportunity to unmute. So feel free to chime in there. I apologize, I think it was Missy and Lawanda. I didn't realize that you were raising your hands.
Okay, thank you, Josh.
Yeah, go ahead, Lawanda.
And so, Jordan, I do have a VA client who is wanting to, he currently has a home in Austell, Georgia, and he wants to trying to figure out how to take advantage of the VA loan, trying to get another property. So he's trying, should I have him contact you?
Yeah, that's fine. Yeah,
okay.
You can contact me. So Josh didn't give him my title earlier because we're not trying to make this about virtual mortgage partners that much. but my title is the production manager. So a lot of you will meet me eventually at some point, especially if you send us any leads. I typically keep in contact with you.
Okay.
But my background, actually, my mentor person, I always believe in mentors. But my mentor was a head underwriter for 20 years. She made me read the VA manual multiple times, and FHA manuals multiple times, and that's the reason where a lot of my knowledge comes from.
Okay, great deal. Thank you so much. I'll have him to get in contact with you.
And
Yeah,
when I
absolutely.
say that he is a guideline ninja, I'm not exaggerating. We do huddles for our team with all of our LOs, and some of the scenarios that Jordan is so easily able to unpack, meaning LOA says, here's the issue. Jordan says, do this, call this number, say this, and then submit this, and all will be good in the world. And like literally, that's exactly as it happens. Like he knows this stuff so inside and out. And I can't tell you how many times that we get people that say, I was told this isn't possible, or this can't happen, or whatever. And it's the knowledge. Sometimes it literally can't, right? Sometimes there's no workaround, but oftentimes there is a way to do it. You just have to look at it from a different perspective or from a different angle, let's say.
Mm-hmm.
Missy.
Absolutely.
Missy, did you still have anything? And I apologize, I didn't realize that you guys had your hand up. And while we're waiting for Missy, so Robert said, also, can Jordan send us info on VA so we have some sort of knowledge on these loans? Yes, we that'll be part of the marketing collateral, is like a one sheet. So that's more like informational, not necessarily something that you would share with consumers per se, but just so like for yourself, a knowledge base for yourself to have that information.
Couple of things. Leon mentioned targeting National Guard and reservists. So perfect example. Reservists do qualify after 6.5 years a lot of times, or 90 days on active duty. I know Ryan wanted to go into eligibility a little bit. We only talked about how much, and like how much houses they can buy and multiple houses. But reservists and National Guards also can buy. They got to meet a couple criterias. A lot of times it's about 6.5 years, depending on if they never go active duty. But once they go active duty for 90 days or more, they're automatically, I've had people that go into the military and was the military for a 4 stint, and then they go into the National Guard. That person would qualify, they don't have to wait 6.5 years, right? They were in the active military first for at least 90 days. But someone that was just National Guard all the way through, it's a little bit longer time frame.
Michael, I opened your line, and while you're unmuting, Peggy, does Jordan NEXA Virtual Mortgage Partners work in all states? So NEXA is licensed in 48 states. Our virtual mortgage partner team is not licensed in all of those 48 states yet. We're working on, we're probably almost halfway there.
Yeah, 20. We're about 22 right now.
Yeah,
22.
But Peggy, we are in
Arizona
right now, right? So if regardless, as long as you're not in New York or Massachusetts, unfortunately, there's not a whole lot we can do to help you there. But any of the other 48 states, if we can't directly help you, we might be
someone
able to
at NEXA can help you.
Yeah, absolutely.
Yeah, I can get you with someone.
Yep. So Renee says, Jordan, would it be accurate to say the company is a brokerage and may not fund the loans? This is a bit off topic. However, I'm curious to know if any of your partners provide second loans on VA assumptions.
So we wouldn't do assumptions because we're not the servicer, right? We're a brokerage. Now running across like actual funding and may not fund the loans, we don't run out of funding. Well, at least the 3 years that I've been out at NEXA, we don't hold a warehouse line. So I would find out pretty quickly if one of our lenders didn't fund. We're the largest brokerage in the country. Let me put it that way. I would know if one of our lenders ran out of funding very, very quickly. They would immediately be taken off our list, and widespread, news would happen, right? So the likelihood of you and your specific client running out of funding for whatever reason is very very light. That gets into the next situation, off topic a little bit, is we actually had a client that did run out of funding and that we saved a deal on. We got it through underwriting in 24 hours, got it through underwriting and approved within 24 hours and a rush appraisal on it.
It's an interesting situation that we get. This was 2 weeks ago. I got a text message. These buyer clients, they literally sat at the settlement table for 4 hours waiting on funding. The bank went out of business that day, never funded the transaction. They reached out. The contract was canceled because literally that was the day. I mean, contract was canceled, but they reached out to me. Can you help? Looped in Jordan, and it wasn't easy. Like, Jordan had to make a lot of phone calls, had to talk to the listing agent, had to talk to the buyer's agent.
He had a terminated contract. I had to literally
this
convince
was
the agent to go back under contract. But
right.
yeah, it was.
And after that, was able to save the transaction back under contract. And we got the initial underwriting back in like 24 hours.
Appraisal is due on the 19th. We got it last Thursday. So appraisal is due on the 19th, and we're trying to close on the 23rd. So we got it last
saving
Thursday.
the deal for the homeowner, saving the deal for the listing agent, saving the deal for the buyer agent, saving the deal for the buyer. Everybody, all good in the end.
I want to go right back to her question though on losing funding as a broker, because there's a lot of misconceptions as a broker too. Most companies aren't just going to go belly up in one day. They're not going to go belly up. What they do is they suspend. I'll give you an example. Today I got a suspension email from one of our mortgage companies on construction loans specifically. You'll start seeing a trend with those lenders because they'll start suspending specialty products. But when they suspend it, typically to keep our business, they honor all loans in process. So in my 12 years of mortgages, I have never lost funding ever at the day of closing. But I'm not out there saying it doesn't happen. That's why we hear about it. Is like you hear about these banks that go just completely belly up. It's like they knew well beforehand that they were going belly up. They decided that they were going to squeeze every single penny they possibly can. Where most lenders that are going to stay in business, they will start cutting programs before, and you are very well aware of what lenders are cutting their programs way ahead of time. And my rule of thumb is if you've cut 2 programs, we don't use you at all. Period. Something's going
red
wrong.
Flag. It's a red flag that something where there's smoke, there's fire.
Yeah. So we have our 8, honestly, I stick in a group, and I talked about this on a podcast with this morning, actually. We really stick in a group of probably 8 to 9 lenders on a regular basis, and they're monsters. I mean, we're talking about $1 trillion companies here. They're not, they're not going to go belly. We're not using mom and dad's funding shop down the street usually.
This is kind of off topic, but not really. It's still relevant. Leon says, I'm actually doing a VA assumption to a non-VA member right now.
That's true.
Yeah. And in fact, Ryan.
We're just not the servicer. That's the problem. Is
right.
We don't have the loan, so that's the problem, a lot of it. But VA assumptions are very good, especially in a market like this, when you're trying to sell homes. So for those of you that don't know what an assumable loan is, all FHA, VA, USDA loans have something called an assumable loan, where they can buy out the equity or kind of almost like transfer the property, but they get whatever that lender's property interest rate was. So for example, let's say Leon's client, hey, I'm actually doing a VA assumption for a non-VA member. Most likely he has the listing, or I'm thinking, probably, maybe. But if you could sell those properties, so if you do have a client that wanted to sell their properties, you can say, hey, I will sell my house off a 3% interest rate. You can literally sell the interest rate, sell the property for the client, right? So they can assume that loan, take over the loan, and get the interest rate that initial client had. So if they had a 2.75 and where the market's right now is probably closer to 6%, they can take over that loan. Now, with that being said, if you're listing and you're wanting to sell it like that, you have to truly, what's the word for it? Relinquish your rights to where you do not have any liability in this whatsoever. There's extra steps involved that you'll need to talk to the servicer about, to where you are not going to, if they miss a payment, it doesn't hit your credit. Like, it's actually paying it off. You're going to get your entitlement back, all those things.
You got to be educated. If you're pursuing that, you got to be educated, or loop in someone who is, just to make sure that all the I's are dotted and T's are crossed, right?
Yeah.
And everybody's on the same page. Michael, did you still have a question? Your line, you can unmute yourself if so. Maryland, I'm in New York. I would have to market to states you do business with. Can we get a list of those states? So Maryland, PA, Ohio, Maryland, North Carolina, Virginia, Florida, Georgia, Alabama, Michigan, Illinois. I don't know if I said Ohio, Oklahoma,
Idaho,
Kansas, Missouri, Tennessee, Texas,
Kentucky,
Arizona, Colorado, California,
Kentucky.
And we're adding more. We have several that are in.
Would you say Alabama?
I think I did.
Alabama, Mississippi. Yeah.
I didn't say Mississippi. Yeah.
There's 35 that we're adding over time. We can get that list to you though. There's
Sure.
35 that don't require certain distance requirements.
Yep. Let's see here. All right. We didn't actually talk about, so Robert said, I live near Tucson. I live in Tucson near Davis Monthan Air Force Base. Would love to hit these guys. So the on Facebook and Instagram, you can't specifically sort of target your ads by interest anymore, right? You can't you can't narrow the target audience. The way you narrow the target audience is through the copy or what you're offering. And that goes for what you can do somewhat on Google. And that's where we're going to get into the nitty gritty of that. But what you're offering is how you attract that clientele, right? And we'll probably have a report. We'll have a video program, like a video, informational video content, where that's what they would be. These interested VA eligible borrowers would be opting in for or requesting more info about, right? So that's how you would just like big picture wise attract and build a pipeline around that. And we'll be filling in the gaps of what that looks like and how to do that, and testing so that you're not guessing what works. We'll have real market data. Crystal says, so any seller with a VA, FHA, or USDA loan can sell their home with an assumable loan? Question.
Yes. Yep.
That actually, I made a
now here's the thing.
We should do an info session just on that. So I made a note on that. We're going to do that.
I know it's not as complicated as it sounds, because a lot of times it's just working with the servicer directly. Now here's the problem. I'm going to give you the problem here. When you do an assumable loan, one, you don't have your preferred lender. Okay. You got to go to the servicer, usually 9 times out of 10, or whoever is servicing at the time or can take over the servicing. Okay. Number one. Number two, it is also going to be at their speed. So if you're selling a house and it takes them 90 days, it takes them 90 days. But you might be able to sound, and I don't know if in this market you don't see a lot of assumables for that reason. But that's going to be another reason. Number three is buying out equity. If they have $100,000 of equity, they're only assuming a portion of the loan. Okay, they're not doing a new loan. Okay, a lot of times. So VA, it's very simple when it's 2 years ago and they don't have that much equity, or a year ago. On an FHA that was 6 years ago that has $80,000, does your client have 80 grand? Is the question. Right.
Because
so it's
the
a little bit
not just going to say, they're not just letting go of their equity, right? They're saying the balance is this, you can assume that, but you still got to pay me you got to make up the difference of the 100 or the 80 or whatever, including, commissions, right? Commissions and other fees associated with the transferring of property, right?
Yeah.
mortgage fees, et cetera,
Yeah.
right?
So family will do it sometimes. Things like that. Family will do it and give them the equity position, whatever it is, but it's not like a cash out either, right? They're not gonna get any money back either if they get a good deal.
I'm curious, and maybe you may or may not, is there any, when it comes to that, is there or are there any state specific restrictions or I'm
I
asking.
haven't heard of any. Those are one of the things I'd probably have to do research on and call the VA
Yeah.
specifically on states. Most of my business has always been out of Kansas, Missouri, right? Because I'm from Wichita, and really it wasn't until about 3 years ago that I opened up to the entire country. But state specific, every once in a while you'll have a state that has probably a weird rule. I can almost guarantee there's at least one. Just like California has a weird rule with FHA, right? And when you're moving one state from FHA to another state with FHA, there's equity positions and certain things that you have to meet if community property rules.
Yep. All right, we're going to come in for a landing here. As I have promised all along here, nothing for sale. However, several of you already asked about, hey, how can I make the connection? How can I send you a potential referral, et cetera? I have put in the chat Jordan's contact info. That's the best place to start. His direct cell phone, 913-543-0875. It's J Syers, SYERS at nexamortgage.com. You can also, we have a form where you can even submit a warm referral if you find that easier, or just get back with me or whoever invited you to this session. You can get back with them. And then the only other offer or pitch that I will mention is for those of you interested, we have a process and a value proposition that you can check out at vqualifier.com, vqualifier.com. The link is in there. And the value proposition is this: we will help you 2 to 5x your lead conversion and thereby drastically increase your GCI from the mortgage and financing angle or perspective. And most of the majority of what we're doing that you'll see outlined there costs you absolutely nothing at all. We'd love to explore that with you. There's a 8-minute or so informational video by Ryan on what that looks like, how that works. And then you can request or schedule a time to get started if you're interested. Jordan, I saw you got one other.
I don't know if Michael ever got his answer. He raised his hand? So
I know. I tried to open his line.
It's muted right now, so I just want to make sure.
Here, I'll ask to unmute.
I don't want him to feel ignored if we leave.
Yeah, totally.
So
totally. And Michael, if for some reason you can't unmute, just hit us up. If you still have a question that wasn't answered. Here's what I'll say this because I've heard Jordan say it before. 8 to midnight, pretty much. You can get him. And I can tell you from experience, he Friday night, he texted me at 11 o'clock on that deal that we saved and said, hey, just got out of underwriting. It all looks good. 11 o'clock on a Friday night. Jordan is someone that answers his phone. And if he doesn't, he gets right back to you. So you can count on the fact that there will be open.
I got 2 missed calls today that have been bothering me. Yeah, I got 2 missed calls from last night that I didn't get calls back on. So
and we try to be, if anything, if we err, we're going to err on the side of over communicating versus under communicating. So if we're working together on something, you will likely never have to ask us to update you. You'll probably have to ask us to, hey, you don't have to let me know or keep me in the loop quite so frequently. We'd rather it be that way than vice versa.
Absolutely.
Yeah. Okay. So we'll get the replay out ASAP, as well as soon as we have the marketing collateral together. We're going to be working on that this week. We'll get those out to you as well. And then one last time, if you have any potential clients, warm referrals, etc., Jordan's info is in the chat. If you're watching this replay, it'll be with the replay somewhere or another. And next week, we're going to dig into FHA financing and the guidelines and maybe some little known secrets. For example, Jordan will share how one of his clients had 8 FHA loans at the same time, 8 FHA mortgages at the same time.
Mhm.
How? You'll have to tune in next week to find out.
Mhm.
So thanks, Jordan. Appreciate you. Appreciate
thanks.
everybody for hanging out and for some great questions. I'm just making sure. Yep. Good.
Yes.
Peterson, we are, but our team isn't licensed there yet.
Yeah.
But we can reach out to Jordan or myself, and we'll get you hooked up. And that one's not the highest priority because it's one of those ones where we need
A branch.
right. And I don't mean highest priority. There's more red tape for us to be live there. Our specific team. So yeah.
NEXA as a whole is there though. So
Totally.
you know, I have no problem talking to you and chatting with you still.
Right on.
If you have a client and point you in the right direction.
Awesome. Thank you.
All right. Thanks. Bye.